why not just be an LP? What is the net benefit that comes from the GP stakes model? Because LPs still have access to the funds that these firms are investing into. You still get a piece of the action, if you will, when they're making these investments. So what comes from the GP stakes model that is not available to LPs?
I'll give you kind of a half tongue-in-cheek answer to that question, which is to say, why should you own Apple stock rather than just buying iPhones? They're in many ways different things. Now, it's more closely related in the circumstance of GP stakes because a portion of what drives our return is the return of the funds, right? I mean, we earn carried interest, and so that's driven by fund performance. But you just get a very different return profile on GP stakes for a few reasons. So if you look at what we buy when we buy a GP stake, we are buying a portion of fee-related earnings. That's the profit of the management company. So that 2% management fee that comes in every quarter, come rain or come shine, we own a portion of the profits that are attributable to that. Yes, we buy carried interest, and we also own a portion of the balance sheet that's typically used to invest in the funds. But first of all, there's tremendous vintage diversification across all of those, because when we invest, in 2025, we're probably investing in a firm that has a 2016 vintage fund and a 2020 vintage fund and a 2024 vintage fund, and they've got that across 2 or 3 different product lines, and they will launch many funds in the future.